Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. We news fear stalks equity markets today. These investors who were gung-ho yesterday are perhaps starting to realise, as I heard, that the economic future is going to be tough. Today's trigger is an upsurge in coronavirus infections in the US as it makes the mistake of reopening too soon. And the US weekly jobless claims show no sign of slowing, add another 1.5 million to the grim total that has now risen to 21 million since March. And the S&P 500 has dived 5.8% so far today in a relentless downtrack. Overnight, European markets fell more than 4.5%. All that optimism, irrational and exuberant for weeks now, seems to be vanishing as investors realise earnings will be very stunted as economies suffer under the twin handicaps of global pandemic and the giant trade policy missteps. And the US Fed said the net worth of American households fell more than 5% in the first 3 months of 2020 as equity prices fell. That removed a staggering $6 trillion from those household balance sheets. It's almost certain that when the second quarter results are released, that vanishing will grow. A $6 trillion reduction is equal to more than a quarter of US annual gross domestic product. And this is the March data, just the start. In China, car sales rose almost 15% in May after a 4% rise in April. China is the world's largest car market, selling more than 2.2 million vehicles in May alone. And China is raising the heat on Australia in another area, bristling at the Aussie changes to their takeover code, widely believed to be aimed at preventing Chinese companies from investing in Australia. US Treasury 10-year yield is down sharply again today, this time by another 8 basis points to 0.66%. You have to say that the bond market signalled the equity retreat a couple of days ago. And the gold price is higher again, rising another $13 to $1,731 an ounce. And oil prices are sharply lower today. They're down more than $3 to just on $36 a barrel in the US. The Brent benchmark is down to just on $38.50 a barrel. And the Kiwi dollar is a lot weaker on the rising market risk aversion, down more than a cent to 64.2 US cents. On the cross rates, we're marginally firm at 93.8 Australian cents, and against the euro, we're a bit firmish at 57.9 euro cents. But that means our trade-weighted index is down to 68.9 and giving up all the gains over the past week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.